Gold continued with the bullish momentum yesterday, achieved close to record high levels as 2142 levels. Yes, and we have recommended you to stay bullish in gold if it stays above 2121. I hope you all profited there. So now what to expect today from gold, how to profit, we will see with the help of charts and indicators. If you're new to the channel, subscribe and press the bell icon in order to get twice a day updates. Next update will be released before the US session and the major news event. Watch that as well. Do like, share and subscribe and press the bell icon. Let's start first to look into hourly charts, and if you have not joined the channel membership, do join the channel membership and support the effort. Now, if you look at the hourly chart, see first of all the rise here, minor retracement, then rise, then the retracement is staying bullish. Yes, it is still staying bullish. Where you should treat it as bearish? Yes, if you see gold staying below 2120, that is the point of time you can say now it is going to drop. How far? See, 2114-15 should be the first support, and then 2110. If these two levels are taken, then you can say major fall in gold is expected. As long as for the day 2110 is not breached, you should not be treating gold as bearish. Very, very clear. Yes, it can bounce back. And specifically, as long as 2120 is not breached, we should not be treating, or we should not be entering a sell order in gold. Now, if you look at the stochastic, this is rising. Also, one must notice on the upside on the hourly charts, it is showing a reversal sign and it is coming at 2130 levels. So that should be an ideal safe entry for us to buy. Now look at MACD, this is divergent, this is bearish, this is looking downwards. If you look at RSI, this is also come out of the overbought zone. Coming to 2-hour chart, now look at 2-hour charts here. Similar formation here in 2-hour charts where you can see higher highs, higher lows and staying bullish. And also, even if you see it dropping below 2120, you will find it getting very, very strong support at around 2115 and 2110 levels. Now, look at the current candle, you will find lower highs, lower lows. Thus, it is very, very important for it to now trade below 2123 in order to stay further bearish. And see, this candle can achieve the lower highs and reverse and deliver similar size of candle, which is almost of $4 to $5 or 40 to 50. A stochastic has come to oversold levels. MACD is now trading with divergence and bearishness here, and it is crossed over at the top. This calls for it to retrace a little further on the downside. RSI is also overbought and it is just coming out of the overbought zone. Now look at 3 hour. On the 3-hour charts, one point you should note, see the bullish candles are bigger in size while the bearish candle, the red candles are smaller in size. This suggests that it is under retracement but not a reversal. The size of the body is very, very important, and this is just trying to retrace and cool down the indicators. What it will do, it will continue with such bearishness, it will wait for the moving average to climb up and then bounce back. What it has done yesterday can repeat again today. If you look at the stochastic, this is dropping, but interestingly the MACD has crossed over here at the top and it is trading with divergence and it is staying bearish. Thus, we have to wait for it to deliver the second red candle, and it has all the probability to continue with more bearishness. So on the upside, we have to be very, very cautious as long as 2130, 2132 zone is not moved. RSI over. If you look at 4-hour chart, likewise on the 4-hour charts, yes, if you see this candle, see it stayed bullish, but prices failing to stay bullish had got a push on the downside. Then we have seen it second attempt to rise, but again got a push on the downside, and then it has started to reverse. Remember, after reversal, first red candle, and now we will wait for it to break below 2130 and 2120 in order to confirm further bearishness. And you can see this once it breaks below 2120, you can find out further bearishness towards 2114-15 and then 2110. Breaking below 2110 is where the bears are waiting, and we will look forward to 2105 levels here, the next target, which is going to be a great support. Now look at the formation here: rise, consolidation, rise, control, consolidation, rise, consolidation. So yes, very important for it to stay below 2110 in order to execute more bearishness. The stochastic has dropped. MACD is trying to converge. It is not yet crossed over. RSI is staying overbought. Coming to daily, before we look into daily charts, if you want to learn this art of trading, be a part of my 29th mentorship batch, which is already started. You can now enroll for 30th mentorship batch starting first week of April. Yes, 29th batch commenced couple of days back. You can reach out to me for more details. You can write an email or you can ping me on Telegram. And yes, if you just want to trade as per the signals on the Telegram channel, you can again contact me for more details. Do join the free Telegram channel for live market updates. All the links are there in the channel and video description. And yes, if you those who asked me to recommend a broker which is safe, secure with global presence, with swap free accounts and the lowest spreads on offer, you can find the broker link in the channel and video description. Now coming to the daily. First of all, on the daily charts, see bullishness getting diminished here. This suggests that today could be the reversal for gold, where it may try to achieve higher lows. Where are the higher lows? Close to 2105, 2100 levels. Possibility is there. Why it could reverse? See, the bullishness got diminished. This candle has got the push from the upside. It has left a wick and it is almost closed at the 50% of the body size here. Now, see, one thing is clear that greater than 50% of the body size is still not a bearish sign, but looking at the diminishing body size, it suggests that it may try to retrace, and also it is outside the Bollinger Bands. The possibility of a retracement is there. Thus, below 2120 levels, we can initiate a selling entry. However, with the caution note that 2114-15 first resistance and then 2110. If these two levels are taken, this time we can look forward to a stronger retracement towards close to 2100 2105 zone. Very, very strong retracement can be expected. Yes, the moving averages are divergent, staying bullish, but the prices are also divergent from the moving average. Stochastic is overbought, the MACD is extremely divergent and bullish, and RSI is overbought. So now, considering this, I will recommend you to sell at 2120 with a caution note that it is a retracement as long as 2100 is not 2110. For today, it is 2110 is the milestone it needs to break, below which certainly it is going to stay bearish close to 2100, 2105 zone. We can expect this for another 50 to 100 pips drop from there. That is 2110 levels. And if it stays below 2100, certainly you can say it is reversing. On the upside, a buying entry I will recommend only and only if you see gold is staying above 2130, 32 zone. Then the next target should be at around 2137.5 and then 2142.5 levels. Any move beyond 2142.5 should be taken up seriously. This is a bullish reversal and a rally towards 2150 can be expected, chances for which today appears to be less. I will be looking forward to a retracement today. Take your positions accordingly. Like, share, subscribe and comment. Join my mentorship batch webinar series Signals channel. Watch out the next update before the US session as well. Thank you. See you again later in the day. Have a great profitable trading day ahead. Thank you.